Good evening, everyone. My name is Krishan Arora, and I'm a partner with Thornton Bharat. On behalf of the firm and my co-panelists, it is my pleasure to welcome you all to the webinar where we'll be discussing a landmark initiative introduced by the Government of India, the Employment Linked Incentive Scheme. This scheme represents a bold and a strategic move by the government to address two of the pressing challenges faced by our economy today: unemployment and formalization of labor. The ELI scheme would support job creation, strengthen employability, expand social security across India. This initiative is designed to empower both employers and employees by offering targeted financial incentives to encourage workforce expansion. The scheme covers all the sectors, including services and manufacturing, with additional benefits extended to the manufacturing sector. Today, I'm delighted to moderate this session, and I'm joined with my panel of domain experts, and together we will navigate through the key insights and intricacies of the LI scheme. I have with me my colleagues, Karan Kakkar, Partner Tax and Finance Consulting, Rajshri Sarna, Partner Tax and Finance Consulting, Sachin Jain, Director of Tax and Finance Consulting. Next slide, please. Taking a quick look at the agendas of today's webinar, we'll begin with the background and a quick overview of the LI scheme, followed by a deep dive into the incentives it intends to offer. We will then explore some of the key aspects and action points for organizations to access these benefits and share some of the practical elements that may require consideration as we await the complete fine print of the scheme. Post that, we shall also share with you on how, as a firm, we can support stakeholders in addressing the overall requirements, process, and implementation of the scheme. At the end, we shall take up a short Q&A session as well, based on some of the key queries that we have received ahead of or during the course of the session. Next slide, please. Historically, India's industrial policy. Next slide, please. Historically, India's industrial policy has emphasized production capacity, automation, technological advancement as key. Initiatives like Make in India, production incentive schemes have successfully boosted manufacturing and attracted global investment. However, they've also led to a reduced labor dependency and increased automation. The LI scheme marks a paradigm shift from machines to manpower, from output to opportunity, and from quantity to quality of employment. And this shift is deeply embedded in the government's long-term vision of Viksit Bharat, a roadmap to transform India into a developed nation by the Centenary of Independence. The Union Budget of 24-25 outlined this vision with a focus on four key pillars, which was employment, skilling, MSMEs, and the middle class. Under the theme of employment, one priority area was identified and which stood out as the foundation to inclusive and sustainable growth, which is employment and skilling. It is to address this very need that the Honorable Prime Minister Narendra Modi said that ELI scheme would actually boost job creation, and the focus of the manufacturing and incentives for the first-time employees will greatly benefit our youth. As stated by Labour Minister Shri Mansukh Manavia, the scheme was aimed at providing around 3.5 crore jobs to youth. The government had therefore announced the union budget. At the time of union budget, the Prime Minister's package of 5 schemes to facilitate employment, skilling, and the opportunities for over 4.1 crore youth, with a total budget outlay of about 2 lakh crores. Next slide, please. And to understand the necessity of this scheme, we must first examine India's demographic and employment landscape. India is home to one of the world's largest working age populations, a demographic advantage that, if harnessed effectively, can propel the nation to global leadership. However, this also presents some challenges, like the labor force participation rate, which indicates the proportion of a population that is either employed or actively seeking employment out of the total working age population is about 60% in FY 23-24, which means about 40% of the working age population is still not participating in labor force, indicating significant untapped potential. Second, the unemployment rate of India, that is the percentage of labor force that is unemployed and actively seeking work, is calculated over a period of 1 year, which stood at about 3.2% in 23-24. Another important data point in relation to demographic structure of the Indian employment: almost 58% of workforce in India is self-employed, 20% of that casual workers, 22% of the total workforce are regular salaried employees with access to social security and legal protections. The above structure emphasizes that only 22% of the workforce is covered under the formal employment, showing an urgent need to increase the formal workforce and extend social protection. And to tackle those above issues, the LI scheme encourages formal job creation by incentivizing EPFO registration, structured employee benefits, and supporting MSMEs in adopting formal hiring practices. It complements skilling programs like Skill India, Pradhan Mantri Kaushal Vikas Yojana, while helping businesses large or small expand their workforce and improve compliance. With this backdrop, let us now begin the overview of the proposed ELI scheme. Let's dive, please. On 1st July 2025, the Union Cabinet, under the visionary leadership of the Honorable Prime Minister, has approved the ELI scheme to tackle high employment, informal employment, marking a major shift in labor market policy. The ELI scheme not only marks a shift towards active employment generation by combining job creation with skill development and financial literacy, it also incentivizes employers while supporting first-time employees through financial aid and social security, aiming to build a more inclusive and resilient workforce. Therefore, this scheme would not only encourage job freshers to join formal workforce, it will also in parallel incentivize employers through PF support to increase formal job creation. And moving forward to the next slide, let me now draw attention to some quick highlights of the scheme. Unlike many job and skilling schemes introduced in the past, the LI scheme has a clearly defined target. Of the total outlay of about 2 lakh crores, the scheme comes with a substantial investment outlay of just under 1 lakh crore, reflecting the government's strong commitment to employment generation. It is designed to be effective for jobs created between 1st August 2025 and 31st July 2027, aiming to generate about 35 million formal jobs within the 2-year period, out of which about 19.2 million employees will be first-timers entering the workforce. The LI scheme is sector agnostic, thereby covering both services and manufacturing, and there are some additional benefits extended to the manufacturing sector, which we'll discuss shortly. Since there is a strategic focus of the scheme on incentivizing first-time employees, linking them to formal social security systems and promoting long-term workforce stability, the success of this scheme will absolutely be critical as permanent jobs have been reducing over the years and may continue to decline as the business landscape become more volatile due to trade wars and advancements in the AI. And now let us move ahead with the discussion on the actual incentives offered under the scheme. To shed light on this, I would now like to invite my colleague Sachin Jain to walk us through the key benefits and support being proposed under the landscape of the scheme. And before I hand over to him, I will request all participants to please put in your queries during the course of this session in the Q&A box, as you can see on your screen, and we shall try and address as much as those queries during the course of the session by responding to them, or we'll take up a few of them out of the Q&A session, which we planned at the end of the session. Over to you, Sachin.
Sure. Thank you, Krishan. I think for setting the context and providing a comprehensive background of the scheme that I think was really insightful, and I've set the base to now deep dive into what the actual incentives are covered by the government. So basically there are two main components to this scheme, Part A and Part B. We'll first take the Part A, which is incentive to first-time employees, which I feel is a very progressive move by the government towards two things. One, integrating young professionals, and secondly, the first-time workers into the formal employment ecosystem. Now, the eligibility criteria for the first-time employees are that they should be first time entering into the formal workforce, and how they will be entering into the formal workforce is by way of a mandatory requirement to get themselves registered with EPFO. Second, they need to have a salary of up to 1 lakh rupees. So if you fulfill those conditions and you are a first time employee, you will be eligible for this incentive. But this new joining has a period in which you need to join. The period is 2 years starting from 1st August 2025 to July 2027. So if you join in between, you will be eligible for this incentive. Now, what's the incentive amount? The incentive amount is equivalent to 1 month EPF wage, subject to a capping of 15,000 rupees. So for example, if the new joinee employees has a EPF wage of say 10,000 rupees, he'll get an incentive of 10,000 rupees only. But if his EPF wage for 1 month is 50,000 rupees, that incentive is capped up to a maximum of 15,000 rupees. So he'll get 15,000 rupees as an incentive. Now coming to how he will get this incentive, The incentive will be paid into two installments. The first installment is after completion of 6 months of continuous service. So therein the government have put in the condition of that employment should be for a continuous period for 6 months. That time you will get the first installment. The second installment will be given after completion of 12 months with one more condition attached to it, that that employee needs to complete a financial literacy program of the government. If he completes that program and he completes his 12 months of service, he will be eligible for 15,000 rupees of incentive. Now, how he will get the incentive? For that, government has uh, made the method of direct benefit transfer scheme, wherein he'll get the amount directly into his account via Aadhaar-based PAN-linked incentive. Next slide, please. So this scheme is only for the first time employees, and the employees only get the incentive. There are multiple benefits which the government has tried to address. The first and foremost, it's a direct financial incentive to the new employees. That is, this amount will get credited to their account directly, and this definitely helps them to make a transition from the informal sector to the formal sector, and what all costs they incur for their first job, that the government has tried to repay them back via way of incentive. Coming to the second benefit is savings promotion. So that's also a unique feature of this policy, wherein the total amount of 15,000 rupees, a portion of that the government will keep in a savings instrument, which will have a lock-in period. So it's not that entire 15,000 will be given to these first time employees. Certain portion of that will be put in a saving instrument. And the objective is to encourage the long-term financial planning of these first time joiners. The third and also one of the important feature is social security inclusion, wherein since via method of enrolling them in EPFO, these first time employees then gets access to various benefits like retirement benefits, insurance, pension schemes, so that they are covered in the total social security framework of the government. Fourth is the financial literacy development. As we have discussed, one of the conditions to get the last second installment is to complete that course. So that has been put with an intention that these first time joiners get financial literacy at a very early age, and this will definitely help them manage their earnings, savings, and investments, so that financial literacy comes at a very young age. The fifth point is related to job stability. So here I'll give you one statistics which is shared by the EPFO. So if we see the attrition rate for the first time employees during the first 6 months, the attrition rate is at a staggering 45%. So to address that, government has put in these two conditions of 6 months and 12 months, so that that continuity of that employment would be there, and they will be able to have a quality employment and not just persons who are skipping or maybe again going back from formal to informal sector. Hence, this condition of 12 months and 6 months has been put in by the government. So this was about part A. We'll move to part B, which is incentive to employers. Next slide, please. So this incentives, again, they have keep the conditions simple, and this is an incentive to employers who are registered with EPFO. The condition of EPFO is because that data government can verify, they have those details with them. So every condition or both the schemes are linked to EPFO only. The first condition is that you need to get registered under EPFO. Second is these incentives are available for all the additional new hirings that you are doing with a salary of up to 1 lakh rupees per month, and you have to retain these employees for at least 6 months. Further, unlike Part A, which only applies to first time employees, this scheme doesn't say about that or restrict to that. It applies to the existing employees as well as first time employees. So if you fulfill these three conditions, you will be eligible for this incentive, but they have kept in a minimum threshold for the employment side. And what's the threshold? So basically any establishment having less than 50 employees they need to hire 2 new employees during the course of next 2 years. And anyone having greater than 50 employees, they need to hire 5 new employees. For example, if an establishment as on date has 100 employees, if they hire 5 new employees having a salary of less than 1 lakh per month and retaining them for the next 6 months, they would be eligible for this incentive because their employment headcount becomes 105. Similarly, for less than 50, if for example they have 20 employees, they just need to hire two new employees to get the incentives under this scheme. Now, as Krishan also mentioned, this scheme is applicable for 2 years, starting just from 1st August 2025 to 31st July 2027. So this employment, that 2 and 5 employees that you need to hire, needs to be done in these two years. Further, these 2 and 5 employees are not per month or per annum. They have not put in any condition. This is a threshold that they have put in, that during these next 2 years, you have to complete this threshold of 2 and 5 employees. Now, the most important question, what's the incentive involved in it for the employers? So incentive, they have kept at 3,000 rupees per month for these additional jobs that you are generating. And the time period is for non-manufacturing, it is 2 years, that for the next 2 years, you will get 3,000 rupees per month, up to 3,000 rupees per month. And for the manufacturing sector, there is an added advantage that they have given, that instead of 2, you will be eligible for 4 years of these incentive. Further, they have put in a conditions of slabs into it. For example, first slab is up to 10,000 rupees of EPF wage. For that, you will receive an incentive of up to 1,000 rupees. Herein, they have put in a condition of pro rata incentive. So for example, if you are hiring new employee of say 5,000 rupees per month, you will get an incentive of 500 rupees per month for that. This pro rata is only for the first slab. The second slab is from 10,000 to 20,000 rupees. For that, you will get an incentive, a flat incentive of 2,000 rupees per month. The third slab is 20,000 to 1 lakh rupees. For that, you will get a flat incentive of 3,000 rupees. Now, if we see what's the maximum a company can get if they qualify under the last bracket of 20,000 to 1 lakh rupees. So for a non-manufacturing sector, which includes service sector also, you will get up to 72,000 rupees per eligible employees over the course of next 2 years. And similarly, since for the manufacturing sector, the period is from 2 to 4 years, you will get up to 1,44,000 rupees per eligible employees during the course of next 4 years. How the employer will get this? For that, they have mentioned that it will be directly paid to the employer's PAN linked bank account. So government has automated a lot of things, and accordingly, everything is linked to PAN or Aadhaar, and basis that you will receive the incentive. Next slide, please. So just for ease of reference, we have taken a couple of examples also to understand the quantum of benefit a company can get. The first example is in relation to service sector. So for example, in this case, XYZ Technologies India Private Limited is an ITS company, currently has 500 employees. Assuming that 31st July is the baseline, as on date, they have 500 employees. Now, during the course of next 2 years, if they hire net 100 more eligible employees, fulfilling the conditions of less than 1 lakh rupees of salary and retaining those employees for the next 6 months, we'll see what's the quantum of incentive they will get under this scheme. Further, for the sake of simplicity, we have assumed that they fall under the last slab of 20,000 to 1 lakh rupees. So this company, since they have hired 100 new additional employees and increased their headcount by 100 employees, they will get an incentive of 72 lakh rupees for the next 2 years. And if we calculate it in a percentage term, if we assume in the case 1, these employees fall under the category of 20,000 rupees per month of EPF wage, getting 3,000 rupees per month constitute 15% of the savings directly to the company. Same for 50,000 rupees, it constitutes 6%. For 1 lakh rupees, it constitutes 3%. So as you can see, the incentive ranges from 3 to 15% of the EPF wage cost that a company is paying, and it directly impacts the PNL. And this is a cash incentive directly receivable from government. Next slide, please. So similar to the previous example, this is a case of a manufacturing entity, ABC Textile Limited, a manufacturing textile products, have 500 employees. Again, they are hiring 100 more eligible employees. Since the period has increased from 2 years to 4 years, their incentive just get doubled. So instead of 72 lakhs, now they are eligible for 1.44 CR of incentive. Again, the percentage is same, from 3 to 15% is the incentive that they receive over the course of next 4 years. So they are eligible for incentive for the next 4 years. So with this, as you can see, this is a very unique policy, I'll say. There is nothing in relation to production, revenue, or exports that a company needs to do. Its very core is in relation to employment generation and formalization of employment. Basis that only this policy has been drafted. Now with this, I'll hand over to Krishan to take it forward.
Thank you, Sachin, for actually sharing some very valuable insights regarding the nature and the quantum of incentives that are being proposed to be offered under the ELI scheme, especially outlining the distinction between the direct benefits offered to new employees as well as the incentives which are being offered to the employers, because both our activities are mutually exclusive. But if you look at the overall package, it not only increases the benefit from a CTC standpoint for a employee, but also over and above that, it also gives that benefit back to the employers to encourage formal employment. And as we move forward, I'll bring in my colleagues Karan and Rajeshri to have a round of discussion on some of the practical insights and some of the areas which require more deliberation, I would say. And before I hand it over to Rajeshri to discuss some of those, I have a question with which I'll start to Rajeshri and then Karan. So Rajeshri, I think the press release mentioned, and Sachin just talked about it, and he used both the terms, which is salary as well as EPF wages. So, when the press release mentioned EPF wages and the salary capped at 1 lakh INR interchangeably, what is the difference between these two terms, and how do you see employers identify this with employees which are eligible under the scheme?
Thanks, Krishan. I think that's one of the questions which has been raised by many people, many of the people on the Q&A as well. What is the amount to be considered? Because that is at the core of determining the eligible employees who would be receiving this benefit, and as well as the employer benefit as well. So EPF wage and salary are two distinct terms. EPF wage is as defined under the EPF Act. Salary or CTC would be as agreed in the employment letter, right? So EPF wage, when we look at the PF Act, EPF wage specifically means basic wages. That's under Section 2B of the EPF Act. So this includes basic and DA, and excludes allowances or components which are like HRA, the overtime allowance, bonus, commission, or similar allowances, or any gifts or presents made by the employer. So there is a specific definition of salary or wages in the EPF Act, which is finding reference in the press note. On the other hand, salary would be the entire gross salary, including all of these components, fixed components and variable components as well. Now, coming to the eligibility from the ELI scheme standpoint. So we understand that employers would need to determine eligibility based on the EPF wage rather than from a gross salary or CTC perspective. When we look at the 1 lakh threshold from the EPF wage standpoint, it will include a larger segment of new joiners who would be eligible for this benefit, because otherwise the EPF wage is almost always a smaller portion of your gross salary. So if we take 1 lakh as the gross salary, then the number of eligible employees covered under this would reduce, whereas the overall narrative and structure in the press release and the EPF circular also, which quite mirrors the press release, seems to be the intent of encouraging new joiners and expanding the employment base. So that is the incentivizing the government is doing. So And for this, we can also find support in how the ECR format looks like, where there is a specific column for gross wages and there is a separate column for EPS wages and EPS wages. So the compliance mechanism in the PF filing system also finds reference to gross wages and EPF wages, which means gross wages would be separate and EPF wages would be separate. And but of course, uh, we believe that there should be a clarification in terms of an FAQ or something from the PF department to address this point, so that it is, there is abundant clarity in this regard.
Thanks, thanks. I think that was very important, and the rationale for actually keeping the term actually is very important, because EPS wage, as you mentioned, is how it finds mention in terms of the calculations. Also, what we understand, and salary for that matter will obviously be interpreted very differently from that perspective. So a very very important point which you mentioned, and I think this is something which will definitely get clarified. But it seems like our view is that EPF wage should be the way it actually should be taken as the basis for looking at the cap of 1 lakh. My question here to Karan, you, is on the rationale of setting this kind of salary cap of 1 lakh per month, sorry, 1 lakh as a criteria for eligible employees under the scheme, and is that enough for that matter?
So that's a great question, Krishan. What I see, the 1 lakh salary cap, which is on a monthly basis, it will solve a dual purpose. One, if we talk in hands of employees. So in the hands of employees, the scheme targets the first-time job seekers who are entering into the formal workforce. So which means, it is intending to target and include large segment of new entrants, especially, who are starting their careers and who are just qualified or, making their first step towards entering the job formal workforce. So that is how this is going to encourage those first time, freshers, we call them, to get that 15,000 worth benefit, and also that course what the government is offering, which will also encourage them and give them some sense of how do we save money, because that is what also government has told, that they will be parking some money in some kind of account where this money goes for the saving. Now, if we talk from the employer's perspective, it will directly this incentive is directly towards the hiring of individuals who are more likely to benefit from the formal employment and social security. So, which means that government is focused on employment generation and not subsidizing the high salary roles. So people at the higher salary bracket, which we say could be above 1 lakh, which is debatable, but okay, if we say even 1 lakh is a very good coverage, any person above that, they are already, kind of settled in life, and they have good foothold on their finances. But yes, overall, if I have to summarize it, it is a very balanced approach by the government, which is inclusive and yet targeted, ensuring maximum social and economic impact. So that is what I could make out of this. While we discuss on 1 lakh per month salary criteria, or what is the difference between EPF and salary, what Rachuri explained. So I would request Rachuri to probably Rachuri, if you can just take forward, all the audiences, what are the practical aspects which one should need to watch out for? And hand it over to you, Rachuri, now from here.
Right. Thanks, Karan. So, as of now, we have the announcement, we have the press release, and we have a circular from the EPFO which mirrors the press release. In the past, whenever there is an announcement which has any anchoring from the EPFO, we've always seen circulars or FAQs being issued by the department, so that all of these, lot of these questions and practical aspects can be addressed. And they also come up with illustrations and other pointers which help the industry as well as the EPFO members to understand how the scheme is supposed to operate and how they are entitled to the benefits. So some of the practical aspects that we have to evaluate as an employer or as an employee, we've captured them over here. The first point is the entire eligibility mechanism is based on registering with the EPFO and being a member of the EPFO. But there are certain categories which of employers or individuals who are not required to register itself, and the EPF Act and scheme provides the framework for that. For example, establishments with less than 20 employees, there is no requirement for them to register with the EPFO. So would the scheme be applicable for them? Would they be able to benefit from here? EPF Act provides a framework for voluntary registration. Now, so therefore, it is a decision point for such small organizations whether, if you want to avail of the benefits, if you're looking at hiring plans, then you may consider a voluntary registration with the EPFO, because the press release is very clear that the benefit goes to only those organizations, establishments which are registered with the EPFO. Similarly, even if you are a registered organization, there is a class of employees called excluded employees whose salary is above the wage limit and who may not be contributing to EPF. So employer is registered, but individuals are not registered. Or even the new joiner who's suppose somebody is joining with an EPF wage of 30,000 or 20,000. They are not mandatorily required to become a member of the EPFO because their salary is above the wage limit. So will they be eligible for the scheme? They will be, from what we read, they will be eligible for the scheme if they register and become members of the EPFO. So what is being encouraged is to bring the organizations into EPFO fold voluntarily, if not they are already registered, and also to encourage individuals to register and become members of the EPFO. And last category here, the exempted establishments who have their own PF trust. In that case, how does the scheme work? They might have new employees whose salary is above a certain limit, and they are not required to register with the EPFO at all because there is no pension contribution. So there is no EPS contribution. What happens to such establishments? Would they also be entitled to the benefit? If we see the past schemes that the government has announced and some of the FAQs, establishments who have exempted trusts would also be covered. But how will they be covered? That is something we have to wait and watch in terms of further circular or FAQs. But for smaller, organizations with less than 20 people, or for excluded employees, registering with EPFO and registering as a member from an individual level, we believe would be important parts. The next part here is the disbursement process. In terms of reaching the benefit to the employees, the direct benefit transfers is very clearly mentioned. It will be linked to the bank account. However, for the employer, what would be the mechanism of disbursing that 1,000 rupee, 1,000, 2,000, or 3,000 per employee? That is yet to be notified. Would that be at the end of a quarter, half year, annual? Would that be subject to certain conditions? So that entire mechanism is going to be that is awaited. And meanwhile, there is another 3 to 4 weeks left for the scheme to launch, so we expect this process also to be outlined fast enough. The other part is there is a specific mention, and Sachin also covered this, that a portion of that 15,000 will be held back and it would be locked in a savings account. So what is the contours of this savings account? What portion are they referring to? What would be the would that earn any interest? What would be the mechanism to withdraw that amount from that locked in portion? So these are again points which would be keenly looked at by the individuals or by the first time joiners, because that's when they will actually get the cash in hand. And the last point here is the entire scheme is being anchored by EPFO. So as an employer, what would be the checkpoints for me to make sure that the compliances are in line tomorrow? If there is a, as part of the PF inspection or any regular visit, what is the documentation I need to maintain? Is the EPFO mechanism geared up to cater to this entire scheme dispersal and administration? So these are some points which employers would be keenly looking at, and which I believe there would be further clarity or further FAQs that come out to address this. So apart from this, there could be many other practical aspects also, that who is a new joiner? So is it somebody who is actually taking up formal employment for the first time? Or is it somebody who was working in one organization which was not registered with the EPFO earlier, but now has joined an organization which is registered with the EPFO and he's joining for the first time. So we have some pointers coming from the press release which says that new joiner is somebody who registers with the EPFO for the first time. So, there could be many practical cases of either at an individual level or at an organization level, which need to be seen. We have some precedents from the earlier scheme which came out during the COVID times, which was the Atmanirbhar Bharat Rozgar Yojana. There were FAQs over there, and that provided a lot of clarities in terms of the reference number of employees, in terms of joining and rejoining cases, who is a new employee, and so on. So while we await the FAQs and further clarification, there is enough in terms of precedence for us to draw reference and formulate our plan as we go along. So moving ahead. Yeah. So now that we've seen the whole construct of the scheme, the benefits to the employees and the employers, the discussion between EPF wage versus salary, or the gross salary, and some of the open or the practical issues. What is it that employees can do, or what is it that individuals or companies can do in the run up to the time period from which this is going to be applicable, which is from 1st August onwards? So first and foremost is, of course, to assess the eligibility. As an organization, are you eligible? Are your employees eligible? If the new joiners, what is your hiring plan? What is the workforce expansion that you are looking at, especially in the manufacturing setup? Because for a manufacturing setup, the capacity expansion happens in a planned way, but could happen in a seasonal manner as well. Could happen depending on any product launch or any new event as well. So taking stock of your expansion, taking stock of where you are right now, are your prior PF inspections or documentation, everything in the clear? So tomorrow, if you were to go for availing this benefit, would you be in a good position to claim those benefits? Is there anything that you need to do in terms of reviewing your employment contract, or how the compensation is reflected? Because depending on your salary structure, the EPF wage will be determined. So how equipped are you, or how agile is the payroll, or your internal stakeholders to adapt to this? So these are all different action points for employers right now to consider, and ensure that you are well placed to avail these benefits from 1st August onwards for all the new joiners who come into your organizations. Moving ahead, so how can we help you? We've covered all the points which are there. Like I mentioned, like Krishan and Sachin and Karan have also mentioned, eligibility assessment, whether for the organization or for employees especially, and keeping in mind the wage threshold. That is something that we would be well placed to assist you with in determining the new employees who are in fact eligible for the benefit. While we await any further requirement from the EPFO in terms of registration or documentation and compliance, based on our past experience of administering the ABRY program or other schemes which have been routed through the EPFO or other government organization, whether through the internship program which came through the MCA, or other programs which have come through other government bodies, we would be well placed to help you in those compliances as well. For example, for the ABRY program scheme, a separate tab was created on the EPF portal where the employer had to register, and they had to also upload the details of the new members. So we expect a similar, potentially a change in the existing framework wherein employers would be required to do the compliance. Taking that forward, monitoring and reporting would be important to ensure that employer is able to substantiate that there is no misuse, or there is no fraudulent claim, or there is no inflated compensation, or any other avoidable situation that comes in, so that you are well placed to demonstrate and to submit any proof in as you go along and start availing the benefits. Next step would be making sure that the benefits that are due, that is received from the EPFO, or if there's any mechanism to claim that benefit that is announced by the department, you are well placed to adhere to that, or your payroll system or your internal or external stakeholders who support you with PF administration are well placed to do that. And finally, the reporting mechanism or the disbursement related coordination, that is something which will kind of round it up and make sure that over the ELI scheme period of 2 years or 4 years, the organization is in fact well placed to receive the benefits as intended under the program and utilize this to the fullest extent. So, all in all, like my colleagues mentioned, this is a scheme which is not linked to your production capacity, investments, or anything. It is dependent on your expansion plans and hiring more people for those business expansion plan. And we are hoping and we believe that this would be fairly easy to administer. However, there are compliance checkpoints that should be in place, so that governance and compliance checkpoints, so that the in intent, in form, and substance, the compliance from the organization side is foolproof and it is well maintained. So with that, I hand it back to Krishan to take the discussion forward and to take up Q&A.
Thank you. I'm mindful of time, and thank you, Rajeshri, for all those insights. Very, very valuable in terms of the practical aspects, the open aspects, and what should companies be looking at right now. And I completely agree with the fact that what they need to do is right now the planning, and if they can be planned and this can be executed, I think there is a potential benefit depending upon you're a manufacturing sector company or a service company. But looking at getting those workforce, changing the model in terms of looking at formal employment, I think are a couple of things which are extremely important decisions. And I think those are the things which need to be taken up as this 2-year process starts very soon. At this moment, while we've addressed many questions over the chat box, I could read some of them commonly, and I think we have only time for a few of them to take up right now. So I'll just wanted to ask you, Rajeshri, back. And you mentioned about the audit part, and when you mentioned about that part is very relevant because compliance is very important to everyone. How does this scheme let the government verify on the job creation or generally is new and sustainable for a minimum required period? And very quickly, I'll take up that as a rapid fire between you and Karan.
Right. So the benefit administration here will be based on your Aadhaar and based on UN linking. So the KYC, that's the route they are following over here. So employers, again, like I said, we expect a change or some updation in the EPFO portal from the employer login, where they would be able to verify somebody as a first time entrant into the EPFO as a member and who will be eligible for this. So I think it's technology which will come to play here to make sure that it is indeed the first time joiners who will be eligible for the benefit.
Sure. Moving to Karan. Karan, this scheme has got a wide coverage when we talk about the sector for that matter, both manufacturing and services. But do you think that the scheme will benefit employers in tier 2 and tier 3 cities equally, or is this again skewed towards the larger firms in the metro cities?
I'll just keep it very short, Krishan. The scheme is designed to be pan-India and sector agnostic. So it covers, all the geographies and all the business sizes. So which in fact means smaller firms, which are in tier 2 and tier 3 cities may even benefit more because of the relatively higher cost of hiring what they have. So this incentive can, and of course the threshold limits, which are at the modest 2 or 5, new hires, what any organization need to achieve. It is very much doable and achievable by small and mid-sized businesses who are operating out of tier 2 and tier 3 cities. And also the benefits, are directly credited to the bank accounts.
Yeah.
So which is also going to be very important to note for all these, small businesses. So in nutshell, it is not skewed towards only larger firms. All the firms across sectors, across geographies in India who are going to generate employment are going to benefit.
So it's completely inclusive and accessible to any sort of
Absolutely.
businesses which are employing in this kind of capacity in terms of the salary or the wages which we are looking at here in threshold. And
Absolutely.
I think one of the common questions which have come up also is about, there are many other incentive schemes which are parallelly going on. State is offering different incentives, which also include employment-related incentives. So are ELI and these state incentive schemes going to work together, or one will have to forego any of them?
Yes, I could also see one of the questions that I did reply to
Yeah.
somebody asking on Gujarat GCC specifically, because in Gujarat IT policy there is a benefit of a similar kind where you generate some employment in Gujarat for the people or who are domiciled for Gujarat, and there are different conditions. So this scheme is very peculiar. This is run by central government. Two, it does not talk about, from which state or which domicile the employment is going to get generated. While these state incentives are only, very much focused on that area or geography, uh, concentrating the employment from that area. So we have seen, these schemes or the incentives where there is a specific restriction. Only then the two schemes do not run in parallel. If there are no restrictions right now, at least in the public, press release in ELI, there is no such restriction that if you're taking some benefit of employment generation through any state, it will be restricted. Likewise, we also need to see in those state industrial policies or IT or GCC policies where, if there is no restriction, then both can be taken parallelly. And like the intent is similar, that you generate employment, get incentives. However, the coverage and the target is very large for ELI. It is pan India, and it is everybody across regions. It does not, restrict to that geography or domicile. So I believe it should run in parallel unless until there is any restriction in the state incentive policy.
And then that also from a state incentive policy is the state which is going to disperse as amount. If central
Absolutely.
government is giving a separate amount, I think that could be something which could be over and above. And I think that could be another way to look
Yes.
at it from the perspective of what is the state restricting it. But yes, you're right. We should still be looking at what the state incentive is actually providing and does not clash with this. But I don't think it should be the case from that perspective. I think we are over time, so I will probably we've probably tried to attempt to answer most of the questions. But last question for you, Karan: why 4 years for manufacturing and why 2 years for services?
Uh, there is no step treatment towards service sector, so to say, Krishan. Why 4 years? It's the logic. What I could preempt or what I could think is because of the couple of areas. One is the capital investment, what goes into setting up of the manufacturing facility, longer gestation periods, and there I would say operations. It really depends on how soon they're going to operationalize and leverage that investment. So it is a planned employment hiring plan what the manufacturing setup has, which can be little longer as compared to a service sector. So probably to cater to that practical scenario, there have been 4 years which have been given to manufacturing sector vis-a-vis the service sector. So that is what my view is. Probably, the government has really thought they have more data or information around why 4 versus 2 years. But, logically, this comes to my mind. You're on mute, Krishan.
Sorry.
Yeah.
Yeah. So you're right. I think that's what it is, and we would probably say that the gestation period could be one of the reasons, and then the second one being the services sector. Obviously, the ROI is actually much faster, and that could be another
Faster.
reason. So I think we are at the end of this, and sorry we just extended this by about 10 minutes, but I hope this was fruitful for everyone, and I can sum up the discussion by saying that ELI scheme is just not a policy. I think it's a transformative vision which is aimed at reshaping India's employment landscape by bridging the gap between opportunity and access and incentivizing first-time employees and promoting financial literacy, supporting employers on the other side by expanding their workforce. I think that scheme is really bold in terms of the step which is being done towards formalizing employment and empowering our youth. And it covers industries across manufacturing and services. Another way of looking at it in terms of the coverage, which is so wide and it's sector agnostic as well. Special thanks to my co-panelist, Karan, Rajashri, Sachin. Thanks for all the deep insights from what we have gathered till now, and there'll be more to follow. happy to have those discussions with everyone, whoever is wanting to do that. Ladies and gentlemen, on behalf of GT Bharat, I would like to thank you all for your time, participation, and look forward to supporting and interacting with you all in navigating the realms of the scheme and unlocking its true potential. With that, we would conclude today's webinar. Have a great evening ahead. Thank you.
Thank you.
Thank you, everyone.
Thank you.